Hi, this is Kevin Kerr for Money and Markets TV. We all know the Hippocratic oath that doctors and other healthcare professionals have to take. First, do no harm. It's a shame there isn't a similar oath taken by government leaders, bankers, brokers, traders, and regulators, because clearly the financial industry needs a refresher course in the subject of ethics. I was in New York this week to consult with a law firm regarding the MF Global case. In my opinion, that firm, the CME Group, and the Commodity Futures Trading Commission are all guilty of mind-boggling betrayal of customer trust and fiduciary duty. I also had the opportunity to walk around Zuccotti Park, where the Occupy Wall Street movement started. Many of the people there have been deeply impacted by the poor decisions made by government and business leaders, reckless regulators, and corrupt banks. Their disregard for basic ethics and moral obligations has undermined the public's trust and confidence in institutions that were once considered pillars of our democracy. But that's not the story you're hearing from the mainstream media. They misrepresent the Occupy Wall Street movement by portraying the vast majority of protesters as a bunch of hippies who don't know what they're protesting. While it's true that the movement is not well organized, the protesters are not aimless or frivolous. They're speaking for many people who feel disenfranchised from the American dream, who have come to distrust financial and government institutions. The 99%, as they call themselves, are angry over foreclosures, the lack of due diligence by banks, the lack of proper healthcare systems, a non-existent job market, and basically a broken government. The list goes on and on. The truth is, this anger has spread to all levels of the socioeconomic scale, and the protests reflect that. Wall Street, Congress, banks, and financial institutions must find their lost moral compass and use it to navigate out of this disaster and regain public respect and trust. Otherwise, America as we know it may never be the same. I've been in the trading and brokerage game since 1988, and I've seen many firms come and go. And it's often the biggest, most trusted firms that are most at risk. Names like Enron and WorldCom, Tyco, and now MF Global, just to name a few. When even the biggest companies can implode, how can you protect yourself and your loved ones? One word: diversification. As a general rule, I recommend never allocating more than 10% of your total portfolio to any one asset class, or with any one financial institution. And within that 10% in each asset class, don't invest more than 10% in any one particular sector. In other words, if you have 10% of your portfolio in commodities, don't put any more than 10% of that money into one commodity, such as gold, oil, cocoa, or others. I call this the rule of tens, and it's my own personal guideline. Yours might look a little different based on your own goals and risk tolerance, but diversifying properly will help you avoid or at least diminish risk. With Wall Street and banks facing a systemic problems of ethics and moral hazard, it's your best bet for protecting your wealth. I'm Kevin Kerr for Money and Markets TV. Thanks for watching.